Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 88, Nasdaq is up 29, S&P's up 17, gold contract up $4.50, trading at $16.88 an ounce. We got silver down 19 cents, $15.28 an ounce. Light sweet crude up $1.23, $24.87 a barrel. We're going to get those numbers this morning. Notes and bonds. You get the 10-year down now, one tick, trading 137.28. The 30-year is off 16 at 178.24, and King Dollar. King Dollar is up 80 ticks, trading 99.983. The euro is at 108. The yen is at 108.79, and the British pound is at 123 to 1 US dollar. And keep your eye on that dollar, folks, because the bottom line, dollar's having a hard time holding price. If that turns into the negative, you're going to see that S&P go a lot higher because the correlation is pretty direct and has been pretty direct for the last couple of weeks. Tom O'Brien, what's going on?
Good morning. How we doing?
Doing good, man. Rocking and rolling.
Oh, quite a market yesterday, man. Positive territory. We'll see what happens.
Oh, yeah. That was quite a sell-off, no doubt about it. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think or Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, futures. Outstanding program. If you haven't test driven yet the Think or Swim platform, real easy to do. You just hit the button. You're sitting right there on the site. Bring it up to allow you to trade with paper money each and every day. And I want everyone out there, whoever's trading a TD Ameritrade, I think you got to get your Levi's on. Get your Levi's on because Kevin just loves Levi's. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, these are interesting times that we live in right now. I mean, here's the question. And I talked with Oliver Rennick about this earlier. Can this market go up with bad news and bad earnings?
Yes.
Can the market rally?
Yes.
And the answer is absolutely it can. Right? Because we've seen it go down on good news and good earnings.
Yes.
So that's what I think a lot of investors and traders right now have to get their minds around. Oh, well, we got to come in flat or we got to come in short because the number's going to be bad tomorrow, right? The jobless claims number is going to be bad. Well, 2 weeks ago, the jobless claims number was 3 million and the market exploded to the upside. And all you got to do is look back to the fall of 2018 when, by the way, earnings were growing by plus 20% and the market crashed during that period. So yes, it can, and I think it will, frankly. But the economic data that comes out is going to be a little ugly, frankly.
Yeah,
it's going to reflect what this market has already discounted, guys.
You know, Kevin, what I actually love that we sold off yesterday. The reason being, folks, this is how deviant markets are, right? What I've seen when you come off bottoms, right? The bottom line, and I've been on both sides, man. Listen, I've been a bear for so long, forget it, okay? Now I'm a raging bull. And what happens is that when you're coming off a low like this, right, it's important that you do monster sell-offs so the bulls and the bears, everyone's still edgy, man. Do you know what I mean? And, you know, we came into the highs of the 27th. And that was, you know, the 27th, the 26th, the 25th. That's when we had real strength. So I think it's going to be tough to break that down, man. And it's just deviant enough, as you're saying, you know, you can have bad news, but guess what? You know, this market is saying, you know what? Where are we going to be a year from now? I mean, I think that's what's happening out here, and none of us really know. I mean, that we understand that, but I like looking at the market, saying, okay, if we don't know cumulatively, what do we all know? What is that information in the marketplace at this particular time? You know, so
the markets are unbelievable, and remember, we say this a lot when I talk to you guys. Don't fade the Fed is a cliche for a reason because it's a rule that everyone should pay attention to, and the Fed is all in like I've never seen in my career,
No.
frankly. They're all in on this market.
There's no doubt. And they're going to be even in more. I mean, looking at this, folks, okay, this is what you're going to really wrap your head around, I think, is that we could speculate, let's say the last 20 years, okay, is the Fed coming in, the Fed's coming in, the Fed's coming in. This time, the Fed's coming in, the SBA's coming in, the government's coming in, okay? You can take your choice on what programs you want to get into, okay? But the bottom line is that they're all out there, and this is like you've already gone by the line of thinking the aspect of how much money is going to be put in. There's not going to be. My take, Kevin, is that there's not going to be a number on it. It's going to be what it is. You know, it's like once you're committed, man. It's like, okay, you can't turn back, because if you turn back and you lose your momentum, then everyone knows that you're really toast. You know what I'm saying?
You know, I think that Neil Kashkari's interview, what is it now, about 2 or 3 weeks ago on 60 Minutes, where he said the Fed has an infinite amount of money to use. And it's very rare that you hear someone in financial markets talk about the word infinite.
Right.
Yeah.
So the fact that he would say that, I think, really is going to turn out to be one of the key statements in this entire sell-off, because he basically told the markets, we've got you. You know, we are all in on this. So I think but really what this market's trading off, guys, is the headlines. And the headlines from New York and the headlines from a lot of these towns around the country are getting better. And this unbelievable amount of uncertainty that we've had in these markets is starting to dissipate. And people are starting to look 30, 60, 90 days out in the future and what this economy is going to look like. And they're starting to make bets on winners and losers. I mean, Apple had a price target raised back up to 300 today. You know, someone came out and recommended Darden restaurants, who aren't even open, but they think they're going to be one of the chains that's going to make it through this because of their balance sheet. People are starting to come out and make bets, so they're on the record as being bullish.
Yeah,
but this economy will look like, go ahead, Tom.
No, there's definitely going to be winners and losers, and we'll see where that shakes out. There's no doubt, too, because I would say that there is going to be definitely a change. I think some of the bigger venues, I mean, like baseball, football, I don't know what's going to happen there. I mean, we don't trade those, but in general, I think those big venues, I mean, people are going to be looking around saying, what are the probabilities you get 100,000 people at a football game? Well, someone's going to be sick, man. It's like, that part's going to be different.
That's a tough one for sure.
There's going to be books and articles and master's thesis written on what has happened in the last 90 days and what's about to happen in the next 90 days. So these are going to be great trading times. And, Tom, I think what you talked about, that sell-off yesterday, that's weak hands and strong hands.
Yes.
I think.
Right.
Yeah, and that's what a lot of this is going to be. So many times in my career, the best buys I've ever made is when my inner voices said, this one might hurt a little bit.
Oh, there's no doubt,
those
man.
always turn out to be the best buys.
Yeah, no doubt. Folks, 45 minutes from now, outstanding program. Stay right there. I'm Mr. Kevin Hanks. You want to understand the option market, option strategies, all of the above. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you. Stay right there, folks. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 152, NASDAQ is up 44, S&P's up 25. Oil, Tom, right? We're going to get some oil numbers. Want to take a look at those numbers?
We sure do. I'll pull it up, man. Let me slide over to the platform. I'll jump up and put my Nadex platform up here. So crude oil, talk about some volatility from under 24 bucks to almost 25. I'm just going to go in here to the Finder. I'm going to refresh all these since I had that up super early this morning. There we go. Go into commodities, crude oil. So we're trading at basically 24.70 right now. Let me just make sure. And crude oil right now, sorry, pulling up 11 a.m. So we have options of 24.50 right now. 24.50 is an option we have for volatility. Right now we're trading at 24.70. And this market, just making sure my mic was on, that was all my pause was. 24.50, the bullish side with about 18 cents a premium, going to cost you about $42, and this is 11 a.m.
Okay.
And 24.50 the downside, 22 cents out of the money, going to cost you about 21. So you're looking at about $63, right? And that's for the 11 a.m.s, Tom. And usually those are a little bit more affordable. When you jump to the noons, though, we do get an option 24.75, which is right next to 24.70 where this is trading at. So I have them up right here. Let's see where this is going to be, because this is going to be, and as this market's just moving so quick, now we just dropped 10 pennies. But the bullish one, which is now 10 pennies out of the money, costing you about 34 bucks. The bearish one, costing you about 38. So you're looking at almost $75, $72 for the noon. Definitely on the expensive side, right?
Yeah, big numbers.
Yeah.
And look at these numbers on this. So the Whisper number, I think is that 14,354 barrels, right?
That is correct.
And
yes.
then
So you got
the survey's 9,250 barrels. This is like, oh my God, I don't know. I don't think we've ever seen numbers that big.
There's a lot of like we've never seen before and stories coming out right now, man. Yes.
So Whisper number, 14 million barrels. That means, well, let's see. My take is that we're going to go a little bit lower, but 14 million barrels. Let me look at this thing. Oh, I guess there's so much in storage, too. That's what's going on.
Well, there's going to be even more now. No.
Yeah, no. Hey, listen, there's no doubt. I mean, there's a story out in the Bloomberg this morning. Even, of course, the rest of the world, has been shut down. When they shut down India, they got it shut down, and you're talking about shut down flat out. So
yeah, they have last week's number down there towards the bottom right. Previous release, 13,833,000.
Oh, so okay, so that was a big number, right?
There you go, right? Yeah.
Okay, so I'm going to go with. I'm going with 24 million.
24 million, I like it.
Why not?
Why not exactly?
Is that it? Let's see.
No. We'll race 1-0. You have 24,000 thousands, right? That number's in thousands, so 24,000.
Okay, we're in.
There you go.
Let's see what happens here, man. Holy cow.
Could you go to the gasoline inventories on that page just to see what the expected number is for that as well?
Oh, that's good. Yeah, so this one here.
Why don't you throw a guess in there as well?
So
they're looking for 5.5 to 8 million. Yeah.
Yeah. So I'm going to go with 10.
10 million even.
Well, actually, yeah, there'll be less driving. Yeah, for sure.
Oh, for sure. I just saw a story yesterday. Did you see a story? A couple of insurance companies, I think, refunding some of the money because so many miles less. I imagine that they probably figured out maybe that was like a preemptive strike against a class action lawsuit or something.
There's something going on there. There's no doubt, man. I saw that come across. When has an insurance company ever come out and say, hey, we're going to give you money back, man, right?
I think it was the type of deal where probably the raw statistical, happenings of no driving and no accidents, they probably realized that maybe they weren't going to be able to skirt the fact that they just collected all this premium and no one's driving and they just made all this money. So maybe they preemptively, as opposed to lawyers getting together. That's exactly what I thought. I said, why would they ever do this? The only reason they'd ever do it is if you're going to have to do it. So that means they probably realized that they were going to have to. For some reason,
That's right, and I suspect what that probably is that there's regulations in every state, okay, and there's probably a formula inside of that where they, go to the state regulators, say, I want to go up on the rate, go up on the rate, go up on the rate, and that formula, they're looking at that formula and saying, okay, well, this formula is not intact anymore because the bottom line is that we don't have people driving, right?
We're just collecting premiums for no accidents at all.
Yeah, right. Yeah.
It was like $800 million between two companies.
Oh, yeah. Listen, Geico, that headlines of Geico, they're returning $2.15 billion.
And no one's driving. It makes sense, I guess. When you look at hundreds of millions of people just in the country, literally at home. Yeah. Think about. It's just staggering, yeah.
And this is a big number. Jeff's bringing it up in the den, and this is coming across the tape this morning. This is definitely a large number, and this is where this can get kind of dicey too, folks. Okay, let me see if I can find this for a second. This is about the amount of people, SPG. I'll do it this way. That haven't paid their.
I see them talking about Staples, landlords. Guide.
Yeah, the April rent. And this one
it's
here.
It's a tough scenario.
It's a tough scenario, and this is even in apartment buildings. And I'll try to find it. It was. I had it at the very top, but it's a big number, folks. Okay, that hasn't paid it, and the real question is going to be, I think, once we get into this a little bit more, is that okay? Some people can afford it. Some people can't afford it. We know that when you get times like these, there are going to be, plenty of folks that take advantage of things that they don't have to take advantage of.
Yeah. It's tough as in, you can keep going up the line almost is how I look at it, though, right? In terms of you have Staples paying their bill. Well, then you have, what if you're the landlord owner and you have a mortgage? Then you have to pay your bill to the bank. The bank has to pay their money. So there's a lot of lines that it can get snagged on.
Yeah, right. Well, this number. There's two articles. This one's actually not that bad. They're saying that real estate trusts that own apartments have collected 85 to 95% of their expected rental in April, but that doesn't match with this other article, because the other article says that 69% of apartment renters made their payments through April 5th. That compares to 81% in March 5th.
I imagine you're probably going to have to pay that money at some point. So if you can pay it, it's probably best to, instead of digging a hole. If not, but these companies just making sure that they're around. They have the cash flow. They may have to pay it in the end. But I don't know if that'll be forgiven That's the whole point of getting, a $1,200 stimulus check and having $2 trillion to businesses to keep their employees, is so that you don't have to just start writing off people, when no bills get paid.
Oh yeah, no, there's no doubt about that, man.
Yeah.
Let's go inside the NDX 100 and see the strength versus the weakness out here. So inside the NDX, you got Marriott up 6%, you got United up 5.6, 5.9, American 5.8.
That's quite a leader group in terms of airlines, travel, and hotel. Yeah.
I actually don't like it because my take is that we are going higher, but when you get the dogs basically going tremendously higher. It's like, okay, how long can that last? You know what I mean?
To be leading the NASDAQ 100 index of technology stocks,
right.
The likes of airlines, hotels, and Expedia.
Yeah. Stay right there, folks. Tommy and I are coming right back. We'll have those oil numbers coming up for you. Dow Industrial's up $1.40, NASDAQ up 48, S&P's up 26. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 215, Nasdaq's up 66, S&P's up 32. And I got this live page up. I'm not sure why it's not coming across.
They're taking their sweet time this morning. What's going on? Yeah, I have the contract up there. No real reaction. 24.75 about.
That's interesting, right?
It sure is. Oh, there we go. plus 15.1. I saw it. It's coming.
Okay. 15.1 million barrels. What did I put?
Where you put 24.
Oh, 24.
There we go. 15.1 million. Yeah, the estimate was 92. Quite a number, man. Still, 15 million barrels. Is gas in there?
Let's see. Just give it a few more minutes. That isn't
They're
the
all
one.
loading in, yeah. But I have the contract right now. I mean, it is rising a bit. We just got a jump of about 30 cents, but we were just at 9:45 this morning. We were just approaching 25. Oil just traded. I got the contract from about 24.53 to 24.84. When we were originally setting up this trade, it was at about 24.75. We started looking at it. So we'll see what happens in the price, but not a huge reaction, but quite a number. 15 million becoming the standard.
There's no doubt. Let's see.
Yeah.
Let me hit this again. Oil, where are you? Oh.
You got to go to past events on the tab.
Okay.
There we go.
The wrong thing, evidently.
Just cancel that, maybe. I'm not sure why that popped up.
Okay, past events. Nope. Oh, well.
Nope.
No.
It's not letting you see.
So let's go look inside the Dow, the strength versus the weakness inside the Dow right now. You got Boeing is the leader out here today. 41 positive points, Goldman 28, Apple 25. Taken away from it, Disney 12, Walmart 5, Walgreens Boots minus 1.3. You know what's intriguing? So listen to this, folks, okay? Let me pull up Walmart for a second, see if I can find it under that, because this is intriguing, man. Now, the state of Vermont is a great state, but this is pretty wild, man. They just turned around, Tom, and they're saying on the big box stores, right? They actually want them to close down aisles of non-essential items inside the box stores.
Yeah, I'm reading through it as you have it up there.
It's
trying
pretty
to say,
bizarre, man. I mean, you know, I guess it's just to stop people from going out to buy stuff that they feel that they don't need. But
yeah, so they want them to just only sell essential items.
Yeah.
Walmart and Costco could. Yeah.
Now the question is, this is where this gets weird, folks. Okay, because then the question is, you know, what is an essential item?
I agree.
Inside a store for you or I or anyone else, okay?
What if you're in Boston and a sweatshirt is an essential item, right?
Yeah, right.
Or
Right
new
now.
shoes are an essential item. Any type of, I mean.
So
when you're
the Vermont directive to cease in-store sales of non-essential items at Target, Walmart, Costco could pretend sales. They're out of their mind, man.
That's really tough. And the need to cordon off aisles or empty shelves may add to existing operational challenges, right? Walmart's hiring, 150,000 workers. And now you're going to have some of those workers concentrating on preparing the store for this, and then how are you going to pay for those additional workers if you can't maybe make the margins on some of the other items? I would much rather see, something like making sure that the stores don't have as many people as, some of these stores, right, per square foot, they're allowing a certain amount of people in the store. That seems pretty sensible as opposed to this idea.
Yeah, now look at this one, too. I mean, this is where common sense is out the window, man. Because what happens is there's no doubt, okay, that if you block off aisles, what does it do? It puts shoppers closer together, right?
The whole thing. I agree. I don't, unless you're only going to, let people in the store for that type of a square footage, which is then you're going to be dealing with the store the size of a 7-Eleven. Seriously. So you better only let 5 or 10 people in to peruse those aisles or something. But I don't get it. I don't get it either.
So what you can get out of this, folks, okay? And what's the point? The point, okay, in this story is you better stay involved in government, in politics, in who you vote for, and everything, okay? Because someone is out of their mind up in Vermont right now. And I suspect, I've been to enough meetings in general, and a lot of times in small places, it's people that don't have anything else to do. So that in itself is pretty insane. Wow. We'll see where that shakes out, but it's a big one. Let's go over to Boeing. Now, this is deviant because Boeing, bottom line, it's only up $7 today, so it really hasn't caught that much of a bid. But Boeing, the bottom line is out here this morning. They're saying they found new software flaws on the MAX.
Oh, jeez.
Yeah, exactly. Boeing has identified 2 new software problems with the grounded 737 MAX that must be fixed before the jetliner can carry passengers again. And this is like the typical when you open up the can of worms, man.
You know what's amusing? In all of these articles that keep coming, because it feels like this same headline could be used once every 3 weeks, right? But they all say, does not affect the plane's estimated return to service in mid-2020. Well, we're approaching May, man. When is mid-2020? You're finding errors right now, and it's May. It's April 8th, and you're talking about June for a return.
They're dreaming. Right. They think none of us went to school, man. They think we can't count. I mean, mid is June, folks. It's a 6-month. It's 12 months.
Yeah.
Oh, man.
Yeah, Boeing's got some tough woes. How about Tesla, man? Can we take a look at Tesla? Tesla's going to furlough and lay off some employees. I saw a headline out there today. Not too surprising and everything going on. Where are we at in Tesla this morning? So off a bit. Yeah, no pay furloughs.
Tesla's going to furlough non-critical employees without pay and temporary cut. Executives average salaries as much as 30% in the U.S. So what happens here, folks, just so if you're hearing this a lot, okay? So this is what the difference is. There's between a furlough and a layoff. A furlough, the reason that companies will do a furlough is that means that they have health plans in place and they have 401s in place. More so it's the health plan. So that the workers can still get their health plans. And a layoff, they do not get that. That's why you're going to see a lot of this. Okay.
No, it's a great point because I was reading it this morning and it just says those who can't work from home and aren't assigned critical tasks will stay employees and keep their health care benefits. Right. That's the crux of the difference. That's an important one for sure.
Oh, it's a big one, man. It's definitely a big one. And what does happen, so if you happen to be in that space, folks, and you're filling out an unemployment form, it doesn't have furlough on the form, okay? You just say you're laid off. This is just a legal term so that the companies inside the insurance policies, they can still be insured and be laid off so that you can still collect the benefits being laid off, okay? But the bottom line is that you don't have to go on a COBRA plan, which is a lot more expensive. That's how this thing shakes out, so.
Okay. Checking back in on oil real quick, right where we were, man. We did get a pop to almost 25.20, but you're trading at about 24.75. So no real reaction, all but remarkable that the market can save 15 million barrels and moving on to next week, man.
On to next week with plenty of oil, man. Oil's cheaper than water right now. Dow Industrial's up 215, Nasdaq up 72, S&P's up 32. Stay right there, Tom. Tell me and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is up 152, Nasdaq up 59, S&P's up 27. Let's go over to our MEMS, the Teddy Cake stat, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cake stat, what's going on?
Good morning. It's a nice, kind of still warm Wednesday morning in Chicago. We've had some good weather the past couple of days, so it's kind of nice, you know, since we're all in lockdown.
That's beautiful, man. It gets people's attitudes better. You look at that blue sky, right? You need it up there. You need it everywhere, absolutely, no doubt. So currency-wise, man, I'm telling you, man, yesterday I was looking between the peso and the rand, man. I just feel like going and putting some big money into both of them. It's like, oh, my God, I've never seen the currencies get destroyed so dramatically in, basically 20 years.
Right, absolutely. Now, it's funny you mentioned the peso, too, because I was going to tell you we have some signals that have gone off in some of our major currency crosses, and I think that we're finally starting to come into a period where some of the currencies are still going to be stressing, but I think some other ones we're going to start to set maybe a little bit of a range-bound kind of thing, Yes. So I think like the Mexican peso and also the Turkish lira especially, I think the dollar is going to still remain a bull, especially because of the coronavirus, fundamental driving that right now. Especially because both of those countries, their numbers are increasing right now. But then we have look at the U.S. dollar Canada and also the British pound U.S. dollar. Those are two major currency crosses, especially the pound, which is the second biggest in the dollar index. And with their prime minister is sick with corona, and their currency is very stable. So in considering the volatility, of all the currencies that have volatility, the pound, the month of March, I've never seen that thing move like it did, So, but with that being said, with those currencies stabilizing, kind of going range bound, I think that it's showing that even though volatility is here and it's not going away, it is starting to drop, and I think that the currencies are, especially for your major currency crosses, they're not necessarily overdone, but we're all in this boat together. And the industrialized countries are, Europe is still, their curve is not exactly doing well, but then it is what it is, but they have everybody helping them, so we have so I think that the dollar is still going to remain strong, but you look at like the euro and the Swiss. Remember last week or 2 weeks ago, we were talking about how bullish the dollar was. Right now, I think you have a little bit of a correction going on to the other direction. I think you're going to have the euro U.S. dollar and the U.S. and the Swiss be strong versus the dollar for the next few sessions or so. I think the pound, I don't think if you're trading that, I think it's going to be fun for range traders. If you're a swing trader, any direction, I think you're really going to be out of luck. Now with the yen, I think the U.S. dollar yen is a place where I have a buy signal on that from yesterday or from a couple days ago. So we're looking for some follow through to the upside, but maybe not that high. Maybe up to back to that 112 area. It's probably going to run into some resistance up there, So I don't think you're going to see a lot of follow through with these moves. We had a buy signal for the U.S. dollar, or excuse me, for the Euro U.S. dollar yesterday, and a sell signal for the U.S. dollar Swiss. But these are only for like the next 3 to 5 sessions, and I'm not looking for a major move from these. I think what they're going to start to do is establish an upper zone and a lower zone for your major currencies for the next couple of months. Because just like we're starting to see a stabilization in the stock market,
yes.
It's really going nowhere, Tom. It's really not going anywhere right now. It's just volatility.
No, I agree, and it looks to me. I started out with that the rand and the peso, and it looks to me that it's blown out and wants to pull back, meaning get stronger. And the pound looks like it wants to get stronger, man. I mean, if the pound breaks the top of this range, right? You've been up here 6 days, man. And what's so cool about that, Teddy, is that the news is terrible over there. I mean, hopefully, Johnson comes out of it, and there's better news out here this morning. But that's pretty cool when the news is so bad. And
their currency is staying stable.
It is.
Right?
Yeah.
And that's why I was highlighting these major currencies that are starting to consolidate, and that's what gives me this idea that the big money, when it comes to the bigger countries, we're all in this together. Like it's when you talk about the Brazilian real and like the peso, they're so far behind the curve right now, and who knows how. I mean, I hope that in Mexico they really start to tighten down, because if it hits Mexico City, I mean, that could just be devastating. So, and we don't want to see that anywhere, So with those currencies, I think that the dollar is still going to be a bull. I mean, with Iran and Turkey, with their rates going up, how can the dollar not be a bull versus those? So I think you're going to see those really stretch going into the next month and a half. And I tell people in my videos, and I talk to, unless you're a veteran currency trader and you have deep pockets, stay away from those markets, because the volatility is just too strong.
And too illiquid, right? Now,
exactly.
Because what does happen, folks, and what's happened right across the world. Now, this is, we're very lucky because everyone wants dollars. I mean, if anyone can understand anything out of this crisis, there's not a country in the world that does not want dollars. If we were a citizen in another country, we want U.S. dollars. Period. That's why this dollar is staying so strong.
Right.
And of course we have unlimited printing abilities, and the Fed's going to do unlimited printing abilities. But the bottom line is, these dollars are going to go overseas. They're going to be in people's mattress. They're going to be everywhere else. But so that's pretty wild.
And here's something I think that'll reinforce what you said about dollar strength, is that those points I think absolutely are viable for dollar strength. But look at what's happening right now. We have gold that is, spiking higher again yesterday. But we have oil that is so low, and obviously that's impacting the stock market, but we're a petrodollar. So that should have impacted the dollar. And during the whole time that the oil has been breaking for the past couple months, the dollar's been strong.
Right.
So, and that's an inverse relationship, So, and especially when you see countries like, Australia and New Zealand and stuff like that, how they're on the outskirts. China's supposedly coming back online. That's good for those countries. But even with those, I see a little bit of divergence. I don't think you're going to see strength in like those countries, because like you said, the dollar is still something that, if this becomes a reoccurring thing, and this is just a wave where it's going to flatten out for 6 months and then next winter it comes back or something, if this is really something that becomes part of our life, well, the dollar is going to stay a bull for a while.
Yeah.
At least I can't see it not being that.
No, well, that's right. Because it's glaring at us, folks. This is not, the aspect of, if I go back, 10, 15 years, especially being in the gold market, plenty of conspiracy folks are saying that, no, the dollar's going to get destroyed, this and that. Well, even you can go back to 20 years ago that what was one of the best traders out there that broke, not Soros, but his partner,
Oh yeah, with the pound.
Yeah, he went all in on the yuan, saying that China was going to be the deal, and that was the worst freaking trade in the world, man. Do you know what I mean? So,
right, absolutely. Well, that's a whole animal on itself too.
Yeah. There's no doubt. There's no doubt about that, man.
Without a doubt. But I think that we are starting to see, and I hope that there's a treatment and things flatten out, and this is not a reoccurring thing. But our lives are changing, and if this does start to become a big part of our world, I mean, you know how much of a bear I've been on the U.S. dollar. So coronavirus aside, I would be bearish looking at this at the dollar right now, But with these fundamentals in place right now, we have all these new industries that are popping up and stuff like that. Like, we'd have no idea how. I mean, good times bring on the worst things, and bad times bring out some of the best things that happen to human, as far as time goes by with our society.
No doubt.
So we'll see.
And folks, you can reach Teddy every trading day at Forex-Trading-Unlocked. Teddy, you have a great week, safe week. Tommy and I look forward to speaking to you next Wednesday.
You too.
Thanks, Teddy.
All right, take care.
Stay right there, folks. Tommy and I come right back.
Or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 291, Nasdaq at 96, S&P's up 42. We're getting a bid under this market, man.
A little bit of a pop.
A little bit of pop. And I got to go over this, folks. One of the tigers inside the den, he lives right down there. They're going to be opening up the Marco Island beaches. Now, this is about as sick as you can get, folks, okay? This is going to end up being a freaking horror show. Because where do you see these stats? Now, Marco Island, folks, is absolutely gorgeous. I mean, you know, the bottom line is that here, I got the stats on who lives here, okay? Because this is important to understand just to bring it in. There's 17,500 people there. The average age is 65 years old, 65.6. I just bringing that up so you can get a kind of a context of it. Let me tell you something. They're going to open them up, and everyone's going to be there, man. I mean, because they're gorgeous, number one, but bad scene, man. It is what it is.
The point of this is, you get things right. We do it all at once, and we can move on, because if it persists with people moving around, man.
This is about money, man. This is not about anything else but money. Which is, I think it's so. And now, what ends up happening here? Well, let me show you this too, because what's happening? They're opening them up as they're in Collier County, folks. As the amount of cases go up in Collier County.
Not good.
Oh, it's just sick. It's unbelievable, man. It's
Not
like because what you have here, you get an aging population, okay, and what you're going to have though is that. That beach is very easy. The beaches are very easy to get to. That's the real bottom line, and they're gorgeous. I mean, so everyone's going to be there. Pretty sick. Anyway, it is what it is. Man, that was a quick hour. Unreal.
It is.
Listen, folks, stay right there. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Don't forget, folks, Basil's doing an outstanding webinar. Check it out on the front page of TFNN. Be riding that wave with them. You'll learn a lot. Thanks, pal.
Thanks, man.
Look at him, folks.